Good morning, good afternoon, good evening, folks. Michael Zuber, one real at a time. We are back with Dustin and Jonathan to talk about the non-QM space. How you guys doing?
Good. How are you doing?
I'm doing wonderful because every day is Saturday, as I like to say. I get to choose what I want to do every day, so that is awesome. I want to get a quick update on the non-QM space. It's been 2 weeks since we've spoken. We've had the Fed meetings minutes out. We've had the first rate increase, all kinds of stuff going on. And, the non-QM space doesn't move every day like, Matt, the mortgage guy would on Wednesdays. But sometimes your moves are pretty aggressive. So what's going on in non-QM?
Well, it's probably everyone's seen across the board. Rates are up.
No,
right?
Rates are up. I didn't know that.
It's crazy. I know it's crazy to hear, but rates are up. And, I think the projection is that they will continue to rise as the Fed continues to move again. But there is a correlation to it. But I always want to remind clients, like, look, when the Fed talks, they're talking about the federal funds rate,
Correct.
Right? They're not talking about the mortgage interest rate. So, the 0.5% increase in federal funds rate doesn't equate to a 0.5% increase in the mortgage rate. But, obviously, when the rates go up for the Fed, then borrowing becomes more expensive, right? Overnight bank lending. And that in turn can, transition into the mortgage rates, which are lending institutions that are issuing out these rates. But those rates are controlled by the secondary market and the people that buy the mortgage-backed securities, not actually the Feds, right? So just some disclaimer out there, but obviously in this market right now, rates are going up and they will continue to climb.
Yeah, I think there's a couple of things that I just want to point out. So first and foremost, I've been very clear. I wrote about this in my first book. People need to watch the lending market, right? Everybody talks about a housing market. YouTube experts who don't know anything except the last 5 years, they talk about a housing market like it's the lead. I keep reminding people the lending market leads this thing. And the lending market is not only getting to a cycle where it's getting more expensive. I believe the traditional lending market where most people play, it is about to get tighter and harder to make it happen. I believe the traditional lending space is going to see a bloodbath, right? They got overinflated. Overhead was too much. Everybody was doing the same loans. Refis are going to go down 75%. It's going to be nasty. Non-QM space, different animal. Non-QM space traditionally, at least mainly my experience, feel free to correct me if I'm wrong, mainly serves investors. As an investor myself, interest rate is one variable. And it's not even the most important variable for me. I just changed the variable on my spreadsheet. I got to get a better deal, which means better price, better value add, better something. I've done deals as high as 12%, right? Back in the day. It just means I had to get 16%. The interest rate is not as important. It's very important for homeowners who sign the biggest thing. For me, it's just part of the equation. I got to make sure my money is working harder if the rate's up. So I think non-QM is going to do just fine. Obviously higher rates kind of shock everyone. For me, it wasn't the rate number, like 6% doesn't bug me, but I will tell you, it bugged me how fast we got here. It's like, I look over here, it's 3.5. Then I look over there, it's 6. The speed that this happened was crazy. And it's only happened one time in my adult life. And that was when Paul Volcker was in charge. So I don't know. Have you guys seen speed like this before?
Not at all. And it is a lot of the reason I think is because we had it not move for so long, and it was
it's kind of boring, right?
We couldn't sustain that, and then eventually with all of the different pieces that were just ready to explode, they all kind of happened at the same time. And I don't think it's going to continue at this pace. I don't think it
can.
If it did, we'd be at 15-20% by the end of the year, honestly.
Yeah, if the rate at this was going, which it can't. Again, one guy's opinion. Again, I look at residential and non-QM, and frankly, private money as well. It's all going up. I believe it's very clear that the Fed, I think Jonathan was talking about this, they're going to get back to neutral. We've been nowhere near neutral. You can argue where neutral is, call it 2.5, call it 3 federal funds rate. it means the mortgage market probably going to settle around 6 plus or minus. And it's just going to get there so much fast. I originally called for the rates to get this high in December, not by freaking April.
Wow.
This was nuts to me. So
I think, I mean, it's with how many times the Feds do plan to move this year, the mortgage lenders know that they're trying to raise rates, and they in a way have built them into the rate sheets already. But
absolutely,
with the most recent hikes, that any negative news that the lenders can use to raise their rate sheets and build a little bit bigger margin and hedge themselves against what is going to come, they're going to do. But I think they've made a margin, at least at this current point, that's wide enough so that the next 2 or 3 Fed rate hikes, we aren't going to see rates.
It won't be 1-to-1, right? It just
Exactly.
can't be. Yeah.
Exactly.
Yeah. The other thing that I think is important, and when I think non-QM, I think investors. Is it fair to say that, I don't know, all or most of your non-QM business are investors?
Yeah, I mean, it's like you were pointing out earlier, non-QM, just by the pure nature of it, is geared towards investors because, if you're a homeowner, you're looking at your own personal income as affordability. The rates are going to determine that. The payment's going to be based off the rates. But if you've got an investment property or a bunch of properties that you're looking at as a portfolio, you're looking at, can that property cover the payment? You're not looking at, can the W-2 that I'm earning right now cover the payment? So it's a completely different ballgame.
Yeah. So I just talked to a big syndicator. It's actually the interview I have before I'm lucky enough to speak with you two. And he's like, Michael, you don't understand this rapid rise in interest rate is going to blow up deals in the commercial multifamily space, deals that were in process. Cause again, commercial market, you could have 90 days from contract to closing. Rates are got up 200 basis points in 90 days. That's going to blow up deals. Commercial markets. There was a time where I can't believe people said this. It's nutty, but he's telling me people believe that rates were going to stay low forever. And thus they got adjustable rate mortgages. They're adjusting now. That's going to take their debt service and break it. And then they might have cash management. And then finally, he's like, with rates up here, people are going to have to get better deals. So what I would tell someone, if you're looking at multifamily, looking at doing some non-QM deals, reach out to Convoy, Dustin and Jonathan, to get a feel for where rates are, because you don't want to have one number and then be surprised later. How do you want them to reach out?
You can email us at privateclient@convoyhomeloans.com, and that'll go to both Dustin and myself.
Awesome. Thanks, guys. Everybody at One Rental at a Time says you guys are a pleasure to deal with. So thank you for being great and getting back to everybody.
Amazing. Thank you, everyone.